What's good, YouTube? What's good, traders? So this is another episode on the trade you missed. If you missed the previous trade you missed episode, you can go over to this link on your right to check where we stopped. So this is an FEG that we're anticipating markets. This is an FEG that we're anticipating that market should tap into and rally to the upside, right? So this FEG is seen on a 3-minute time frame, and we're waiting for the market to tap into and rally to the upside. But first, we can see that this is also a trade here, because at the opening of this FEG, we can see a break of market structure here, indicating that markets want to go bullish. Now put your entry here and your stop loss here. Prior to this trade, you can see the market tapped into a previous fair value gap and breaker. So you can just put your entry here and your stop loss here. This is where your take profit should be, and you can see it's a 1:2 risk to reward ratio. Or you can as well put your take profits at this other high here. As you can see, this is a previous high, and also this should be your last take profit here, and giving you a risk reward of 1:5 ratio. So that is not the trade we are looking at, but we just want to check that out, that this strategy actually works. And since it's a backtesting video, let's just leave that aside for now and move over to where we're anticipating markets to tap into. So as you know that this is still an FEG that has not been filled, so we are anticipating the market should tap into this fair value gap and create a break of market structure. You see markets tapping into this fair value gap and as well taking out this liquidity. This entry has become a liquidity. So market takes out that liquidity and trying to break this previous high. If it has not broken a previous high here, it has not indicated that it wants to go bullish. All right, so after markets tapped into this fair value gap, created an FEG, but did not cross over any previous high, we can't take any trade here. So moving on, markets came back down, tapped into that FEG, created another FEG, and created a break of market structure, meaning that the market has crossed and closed above this previous highs and created an FEG. So this FEG is what we'll be using for our entry. So any tap into this FEG would be a tap for an entry to go bullish. Now moving forward, we see the market tapped into that fair value gap. Okay, let me highlight it. So market tapped into the fair value gap, and what you have to do is to put your entry here as market taps into that fair value gap, and put your stop loss here. You can see how market tapped into the fair value gap, and you put your take profits at the previous high here. You can see this is a 2.8 risk to reward ratio. Or you can as well take your profits here or here. You can see how markets rally to the upside, giving you a take profit of 1:8 risk to reward if you were to close above this high right here. So this is a risk to reward of 128 0.5. And moving on, we can see another trade here on that same 3 minutes time frame. So let's move this aside. On that same 3 minute time frame, you can see two trades in fact here. So this is a fair value gap right here and a supply zone also. So we're anticipating the market taps into this fair value gap, giving us a break of market structure to the downside. Now we can see a break of market structure here. Market closed below this low here. It did not break structure here after this fair value gap, but broke structure here. You can see how markets tapped into this fair value gap, giving an entry here. So your stop loss should be above that high that created this fair value gap here, and your take profits at the previous low here. You can see market giving you 1 to 3. So you can as well use your previous fair value gap as your take profit. So at the opening of the fair value gap here, you can use this as your take profit here, giving you a risk to reward of 1 to 4 risk to reward ratio. So that is one sell right there. You can see another sell here, given that this is a fair value gap, right, and this is also a fair value gap that has been created, and a break of market structure right here. You can see a break of market structure right there. Let's take this out. So you can see a break of market structure here. This is a low that was taken out and a fair value gap created. So after market created this break of market structure and fair value gap, we can see market coming towards that fair value gap again. And after markets tapped into this fair value gap, you can see a sell. So you can just put your entry here and your stop loss right above here. Your take profits below the last low or a fair value gap here. You can see a fair value gap here because this fair value gap tapped another fair value gap, which is your POI, or as people call it, a point of interest. This is a fair value gap here and another fair value gap here, giving this fair value gap more strength to take you out. So you put your take profit at the beginning of the fair value gap. So at the start of the fair value gap, you take your profit there, giving you 1 to 3 risk to reward. So we have two sell trades, 2 bearish trades inside the bullish trade. Now you can see how bullish the market was, tapping into our last week fair value gap. Market was so bullish that you could take profit at this extreme high here. This is our 15-minute time frame. As you can see, markets crossed above a previous high. This is also known as a previous PDRA. Any high is also a PDRA. So markets crossed above that high, and we are expecting the market to create a break of market structure and a fair value gap. Now market has crossed that high, created a fair value gap, but no break of market structure yet. As you can see, this is a break of market structure created now. So what we need to do is to wait for market to tap into this fair value gap. So see what market did. Markets use this, you can call this an inverse fair value gap or a breaker. Market use this breaker. If you go over to our 30 minutes time frame, let's go over to our 30-minute time frame. So this is our 30 minutes time frame. You can see that we have a breaker here. So market use the breaker as that entry signal. So this is the breaker here market used. You can as well put your entry here. Put your entry here, and your stop loss above the breaker there. So this should be your take profit. Your take profit is below that last low right here, so giving you a risk reward of 1:4 ratio. This is how you can give this more confluence. By your left, you can see that there is a fair value gap here. So this is a fair value gap also here. Let's look at the fair value gap. So this is a fair value gap here. This is a fair value gap here that you can use as your confluence. This is why markets would want to go for a sell here. There is a fair value gap and also a previous high that was taken. So after these two confluence, after these two PDRA that has been seen, market created a break of structure and also a breaker here. And this breaker is going to be strong because it has a fair value gap now turned to an inverse fair value gap right here. So moving forward, market tapped into it and gives you a sell entry here. So that is our third trade. So let's go over to the next trade. So let's move over to our 5-minute time frame and see the trades we missed. All right, so this is another trade here. We have a fair value gap here. So let's start from here and move it to our right. Okay, so what we need to look for after markets tapped into this fair value gap is a break of market structure. Now this is a break of market structure here that has been formed. You can see markets tapping into this fair value gap and broke structure here. This high closed above this previous high here and created a fair value gap. Let's highlight the fair value gap from here to the end here, and you can see that market rallied to the upside having tapped that fair value gap. So this should be your entry here. Your entry is here at the start of the fair value gap, or you can use the order block that created that fair value gap. But on the safe side, you can just use the start of that fair value gap and put your stop loss here. Your take profit should be here at the end of that previous high. That is before any fair value gap. Looking at this fair value gap, it can take you out coming back because this fair value gap was coming from a previous fair value gap, given that this is our fourth trade that we missed. And let's go over to the next trade. Now this next trade is okay. This is our fifth trade right here. So this is our fifth trade right here, and you can see a fair value gap right here. This is a fair value gap. This is a fair value gap. What we need to look for is a break of market structure. Like I always say, a break of market structure should be here, having created a fair value gap. Break of market structure that was created. And the next thing is to look at the fair value gap and place your entry there. You can see inside that market tapped into this fair value gap here. All right, from here to this spot here. So this fair value gap, market tapped into it and created a bullish move, long position. Put it here. All right, so this is our 5th trade. Put your stop loss here. Your take profit should be at the previous high here, or this fair value gap here, so you can just take your profit here, giving you a risk reward of 1 to 4.3 risk to reward ratio. So that is our 5th trade. And our 6th trade is moving back to our higher time frame, and since we can see a fair value gap here, let's look at what this fair value gap is trying to tell us. So let's identify this fair value gap from here to the end. So let's go over to our 30 minutes time frame. This is our 30 minutes time frame here, and we can see the market is coming from a fair value gap, like I said. So any fair value gap that is created needs to be examined, needs to be checked, because that fair value gap might indicate that okay, market is trying to respect that previous higher time frame fair value gap. So this is our 5 minutes to have a very clear view of our break of market structure. Now you can see there is a low here on our 5 minutes that I told you, I said market broke. So market broke this low and closed below it, giving a space for entry on your fair value gap. So that is how we found an entry here and took our profits here. So that was the 6th trade. Looking at this 7th trade, you can see that market respected an FEG here. So this is an FEG, market respected here. You can see. So move your FEG down to the low of that move. So since you have indicated our FEG, let's go over to our 3 minute time frame to have a clear view. So you can see that market, there is an FEG here on our 3 minute time frame that market still respected here. So as you can see, this is our 3 minute time frame, and you can see market respected this fair value gap right here. This is the fair value gap here. So you can just put your entry here at the end of the fair value gap, or here. You can put your entry here. For a higher risk to reward, you can just move it down to have a more risk to reward. So market tap that fair value gap here. After market tap the fair value gap here, did it close above the previous high? It did not close above the previous high here. As you can see, we have just wicks and wicks. So but here market closed above a previous high, giving you a break of structure. This is your break of structure here, and market created a fair value gap. So after market created a fair value gap, what you need to look for is an entry, and you have it here. This is your entry here, and you can take your profits right here. For a better risk to reward, you can also take your profits here. So you can see how markets will give you a risk to reward of 1 to 4.4 ratio. So let's go over to our 8th trade. This is our 8th trade, and because we already highlighted a fair value gap on our left, this is a fair value gap on our left. So I highlighted this and dragged it over to the right and waited for market to tap into it and give me a break of market structure. So this is a break of structure that the market just happened to show me here. So market tapped into it, did not break structure. Market tapped into it, did not break structure. Market tapped into it here and broke structure. So you can see the market closed above this previous high here. I would have missed this because on a 3-minute time frame, market did not come close to my entry here. But for people that took their entry here at the beginning of this first fair value gap, there would have been an entry here. So I would have missed this trade because I would have gone extreme to this as my entry. Market created this break of structure to my right. I am going to wait for it to tap into this FEG. So this is how I would have taken my profit here at this spot here because of this fair value gap here. So I would have taken my profit here, or if I wanted a more relaxed risk to reward, I would have taken my profits here at this previous high, giving me a risk reward of 2.4 ratio, or this high here giving me a risk reward of 1 to 4.1 risk to reward ratio. So I would have missed this trade, by the way, and for the ones that took their entry here, this would have given them a risk reward of 1 to 2.4, or here a risk reward of 1 to 3.42. all right, so moving on to the 9th trade. As you can see, so there's a fair value gap here. So this fair value gap hasn't been filled up yet. So this is the fair value gap I'm looking at, and you can see the fair value gap here. All right, so this fair value gap right here hasn't been filled, and I'm waiting for market to tap into it and give me a market structure shift. So this is the structure shift I'm looking for. You see how market closed. Market did not actually close above this previous high. This is not a break of market structure, so I won't have entered this trade. It wouldn't have been a plus for me. It shouldn't have been a trade for me. So, but I still consider this a good trade because this FEG, it's quite reasonable for market to tap into and give me an entry. But I did not see any break of market structure here. There was no break. Market did not close above this previous high. So that would be a no for me. I clearly would have missed that trade. So this is another trade that I would have taken as my entry because, okay, let's take this out. This is an FEG that's still valid. This is an FEG that is still valid, and moving to the right, market tapped into it and took out this previous low right here. See how market took out the previous low right there, and I'm waiting for market to give me a good break of structure. After market tapped into this fair value gap, I'm looking for a break of structure. So there's no break of structure here, but there's a break of structure here. You can see it. So market broke above this previous high and closed above it. See, market closed above it, creating what a good fair value gap. Now this is a good fair value gap right here. This is a good fair value gap right here. This would have been a good entry. For a higher risk to reward, you would have used the order block here that created that fair value gap. Other blocks with fair value gap are very powerful. So this would have been the entry here, and your inducements or liquidity taken here also. So this should have been your entry, a long position from this spot, and your stop loss here. So you can take profits here you could have had a risk reward of 1 to 3.7. So your entry here, your stop loss here, and your take profit here at this previous high right here. So that would have been a good trade, and that was number 10 trade. So let's go over to the 11th trade. Now this is our 11th trade here. So we can see a fair value gap here, because it's all about fair value gap, right? So on a 3-minute time frame, still see a fair value gap here. We draw it down and market tapped into the fair value gap. After market tapped into that fair value gap, you can see a break of market structure here. This is a break of market structure here. Market closed above this previous high and created a fair value gap right here. It's a good fair value gap right here. And prior to this trade, there was a trade here, because this was also a fair value gap that market created here. This is a good fair value gap. So you would have taken this as your first fair value gap and your inducement here and your entry here. So this would have been your previous trade. This is a risk reward of 1 to 2.75 ratio. So let's take this out. Let's go over to this trade right here. So this is our first fair value gap. This is the second one, creating a break of market structure. Market tapped into it, giving us our 11th trade, number 11 trade. So our entry is right here. So your take profits should be here at the top of that previous high, giving you a risk reward of 3.29. So that is our 11th trade. Or you can use this previous high here as your take profits. This is your previous high here. So this is your previous high, giving you a risk reward of 1 to 4.7 ratio. So let's go over to our next trade. Now this is a fair value gap right here. This is a fair value gap right here. Let's go over to our 15-minute time frame to check for that fair value gap. Alright, so we have a clear fair value gap on the number 12 trade. So on our 15-minute time frame, you can see a clear fair value gap here. This is a clear fair value gap, and what we need to look for is a break of market structure. Break of market structure on our 5-minute time frame. On our 5-minute time frame, you can see a break of market structure after market tapped into that fair value gap. We need to look for a break of market structure, which is this. You can see how market closed above this previous high here, giving you a good fair value gap right here. So let me highlight this fair value gap right here. It's a good fair value gap right here. So this we have as our inducement liquidity, and we are waiting for market to tap into this fair value gap right there. And since we have our break of market structure, market is coming back to our fair value gap, and then we'll put our entry right there, right here, and our stop loss just below this previous low that created that fair value gap, and we can take profits here, but this will give us a risk to reward of 1-to-1 ratio. This is our previous high. Or better still, we can just go over to our higher time frame, which is 30 minutes, and look for our previous high that we can use for our take profit. So this is our previous high that we'll be using for our take profit right here. So let's go over to our 3-minute time frame back. and you can see our previous high just here, but this is quite low. Our risk to reward will be very, very low, giving you a 1.8 risk to reward. So you might want to be greedy and put your take profits here, but look at how market will mess you up. See, market takes you out. See how market takes you out right here. Just a little more point to get your take profits, but market comes down to take you out because of greed. And let's move over to our number 13th trade. So we have a break of market structure here and a fair value gap right here. So let's move closer to have a clearer view on our number 13 trade. So since we are coming from a high time frame fair value gap, on our 3-minute time frame, this is a previous low that was taken out. When we go to our 1 minute, we can see a previous low that was taken out on our number 13th trade. Market just created a fair value gap prior to that market structure break, and that should be your entry. So you see how market give you an entry there, and your stop loss should be above this high right there, and your take profit should be below this low right here, giving you a risk to reward of 1:3 ratio. So that is our number 13 trade. So this is our number 14th trade right here. So having tapped into a previous fair value gap right here, this is a fair value gap right here. Market tapped into this fair value gap, and now we are looking for a break of market structure and a fair value gap. Now we have our break of market structure right here. So this is our break of market structure that was created on our 3 minutes. Let's go back to our 5 minutes. So this is our 5 minutes. You see how clean it is now. After market tapped into this previous fair value gap, you see the break of market structure. After this break of market structure, we are anticipating the market to tap this fair value gap that is being created here. So let's check this out. So this is the fair value gap that was created here, and this is your liquidity or your inducement here. You can see the power of fair value gap. Let's check out this long position. So you take your entry here at the start of the fair value gap, and you take your stop loss. You put your stop loss here at the end of the order block that created that fair value gap, and you take profit right above this high here, giving you a risk to reward of 3.25. You can see 3.25 risk to reward. So that is now number 14 trade. And do you have a number 15 trade? So we do not have a number 15 trade right now, but we are anticipating the market to go bullish because of this fair value gap. This is a fair value gap that was created right here. We are anticipating the market creates a break of market structure. So I have not seen a break of market structure yet at this spot, but if you go back to our 3-minute time frame, you might see. So this should be a break of market structure on a 3-minute time frame, because market closed above this previous high right here. Market closed above this previous high right and created a fair value gap here. So this should be your entry for this 3 minutes time frame. A long position right here at the start of this fair value gap. You can just use your inducement first after market has taken that inducement, so you can just enter with the order block right below. So this should be your entry, and your stop loss should be below this low right here, and this should be your take profit right there. So giving you a risk reward of 1 to 3.6. You can see what can hinder your trade from not moving past this spot is this fair value gap right here on your 15-minute time frame. And you know that 15-minute time frame is quite powerful than the 5-minute time frame. So this might hinder your trade not reaching this or this fair value gap. So this fair value gap might be your first TP, and this can be your second TP. Or better see, if you have a third TP, you can use this as your third TP. So this is a forecasting of the trade. So this is giving you a risk reward of 1 to 8 ratio, and this giving you a 1 to 4.4 ratio, and this giving you a 1 to 2 ratio. So that should be our next trade on Monday. We'll be looking at that trade, and if it goes our way, fine. But because of the break of structure that has been seen there, places that trade quite valid. So let's move over to this spot too. This can be a move too. This one can be a move because market has created a fair value gap right here, and you can see market is also coming from this. You can see market is also coming from this fair value gap right here, because this order block right here is quite powerful, because it created this fair value gap right here, and that is what market respected here. So market respected this order block and this fair value gap, and now created a fair value gap and an inducement. So it can be a trigger, it can be a move like this. Let's see. So it can be a move like this. So it can be a move like that because of this fair value gap right here. So those are the trades we missed last week. So do well to check the next episode on GBP USD next week, Sunday. Peace.